This tiny crypto sector could one day be worth trillions, and the investors who get in early could see life-changing gains. In fact, this sector of crypto is what I believe will finally allow crypto to realize its full potential and to go from just $1 trillion asset class today to a $40 trillion asset class in the future. It's one of the highest potential use cases for massive crypto growth and adoption, period, and it's still extremely early days. I'm talking about tokenized securities, real estate, real-world assets, and more. And I have some projects that I think are positioned to benefit from this that I'm gonna be sharing later. You see, up to this point, because of poor regulatory guidance, crypto has been unable to release 90% of its potential and use cases because it just can't. Projects already have to jump through an insane amount of hoops to avoid being labeled as a security. And often, even when jumping through those hoops, they still end up getting labeled as a security. If you don't know what security is, it would be like stocks, bonds, ETFs, mutual funds, etc. All of those things are securities. And stocks, for example, give you ownership rights into a specific company. So somebody who owns Apple stock is actually a part owner of Apple. By contrast, most crypto tokens are stuck as like utility tokens or governance tokens. They're used for a certain thing or sometimes to allow you to vote on certain proposals, but don't actually guarantee you any sort of ownership into a project or protocol, which severely limits the use cases and potential of many crypto projects, tokens, and NFTs. I want you to imagine something. Imagine if instead of buying a token for yet another DEX or yet another layer 1 competing with ETH, imagine instead new projects launching that had nothing to do with crypto. They could be AI startups, some could be the next Uber, some could be the next Instacart, some could be the next Facebook. And imagine in crypto, on-chain, you could buy into the pre-sale of these startups as a part of their initial capital raise. And these tokens that you buy give you partial ownership of this startup or this company. Doesn't that sound like something that would be really interesting? Wouldn't you love to have the option to invest early into some of the most innovative startups on the planet? I know I would, but traditionally people like you and me, average people, don't have the ability or the access to invest into these startups. That's something that's limited for the elites, for the VCs, for those in Silicon Valley who went to the right colleges, shook the right hands, and know the right people. But these startups would love to raise money from you. It's not easy for a startup to raise even a couple $1 million through these traditional systems. It's a lot of work. Compare that to crypto though, where you have things like Pepe the Frog, where it goes from 0 to $1.8 billion in just 2 weeks. I can guarantee you that a lot of these startups would absolutely love to tap into these markets and tap into that capital. The problem is the current regulatory environment makes that near impossible. The government has this weird thing where they believe the average people or poor people are too stupid to be able to invest on their own, so they have to make all these rules and regulations and limit the things that, average people can invest to, because if they do, obviously they're dumb and they're going to invest in something stupid and lose all their money. They shouldn't have the right to do that. So we're going to parent them as the government and make sure that they can't invest into those risky things, which obviously I could get really into. I'm pretty passionate about. I think is a stupid concept, and I think that people should have the ability to spend their money as they choose. It's their money. If they want to gamble it away on a meme coin, that should be their right. You should be allowed to do that because it's your money. Why does the government tell you what you can do with your money? I mean, in some aspects, they'll let you go gamble it away in Las Vegas, where the odds are stacked against you. But if you want to do your own research and invest into crypto, invest into speculative startups, that's too dangerous for you. That should only be allowed for rich people and the elites and those that are well connected. Obviously, nothing nefarious going on with that. The problem is with crypto that the current regulatory environment makes it near impossible for these sorts of startups to be listed on chain because they can't have the properties of a security. I believe though, personally, with crypto, over time, a lot of these regulatory hurdles will eventually be solved, and that all these assets will eventually make their way on chain. Just like how only the elites or the well-connected had the ability to share their ideas at a mass scale before the internet, but after the internet, anyone with an internet connection could. I believe that one day in the future, anyone with an internet connection is going to be able to invest into these amazing startups or raise money for their own incredible startup. And even people like Larry Fink, the CEO of BlackRock, believe that the tokenization of securities will be the next evolution of the markets. One day we'll have tokenized ETFs trading, tokenized real estate, tokenized hedge funds. And when that happens, it'll open up the floodgates. DEXs like Uniswap have already done over $1 trillion in volume. And crypto is tiny right now. What do you think will happen when all of these assets come on chain? What do you think will happen to DEXs like Uniswap? What do you think will happen to ETH or Arbitrum or Curve, or stablecoins. All these crypto projects will go from just being used for trading crypto to being used for an entire world of other finance projects. And as an investor, I dream about the day that I'll be able to buy tokenized commercial real estate in Florida with just $100, or buy into the next big AI startup without having to have well-connected friends, in Silicon Valley. And again, I'm not the only one that believes that the tokenization of assets is the future. Jamie Dimon, CEO of JP Morgan Chase, says, "I think tokenizing assets is a very interesting idea. It has the potential to make assets more liquid and accessible and to increase transparency." Lloyd Blankfein, I don't know if I'm pronouncing that right, former CEO of Goldman Sachs, says, "I think tokenizing assets is a very promising technology. It has the potential to revolutionize the way we trade and invest." Cameron and Tyler Winklevoss, co-founders of Gemini, say, "We believe that tokenizing assets is the future of finance. It has the potential to make the financial system more efficient, transparent, and accessible." Elon Musk, CEO of Tesla and SpaceX and Twitter and a bunch of other stuff, says, "I think tokenizing assets is a very disruptive technology. It has the potential to change the way we think about money and finance." So the question is, if we believe this is where the crypto space is heading, and if we believe the tokenization of assets is the future of crypto and of finance, what can we do right now to get set up and win big? Well, here's a list of some crypto projects that will either benefit from this emerging trend of tokenization of assets or are already working toward this goal and set to heavily benefit from it. But before we get into that, for anyone interested, as a part of the Obsidian Council, we have monthly research reports on various cryptos and narratives I'm excited about going into the next bull run. We also have our monthly airdrop guide, the Yield Hunters Guild, which is a library of strategies to put your money to work for you, earning crypto passive income, yearly in-person meetups, which we have a beach trip coming up in July, and so much more. There's a link in the description if you're interested in joining. All right, so some obvious projects set to benefit from this trend would be Uniswap, Chainlink, Curve, and Ethereum. Don't worry, I have a bunch of other projects. I'm just starting with these ones. High network activity on Ethereum means a lot of Ethereum gets burned, which would mean massive deflation of Ethereum and a lot of ETH being accumulated. And some people who don't quite understand Ethereum always repeat the same talking points, which is like, ETH is so expensive, I hate using ETH, it's never going to be the future because it's just too expensive, the average person can't use it. Most people don't understand that the Ethereum base chain is never meant to be like the place where people transact. It's not meant to be the place where like really rich people do transactions. In the future, 99% of people will not be transacting or using the base layer of Ethereum. Instead, it's meant to be that all retail activity will eventually switch to layer 2s like Arbitrum, Optimism, etc. Those chains operate on top of ETH and burn ETH with every transaction. Moving on, Uniswap and Curve, as obviously the largest dexes in this space, would benefit heavily from a bunch of different assets coming on chain. That would mean more trading volume and more transaction fees. And while I'm not quite sure how trading securities would look legally, or like what the legal requirements or framework would be, like would there be KYC to that? How would that work? How could we possibly do that with crypto? How would that work with the DEX? I'm confident that as market leaders, they would be at the forefront of whatever that is. So, if there's a new requirement for DEXs, they would just launch maybe a second DEX or, a new part of their DEX that would allow them to meet those requirements. At least in my mind, that's how I envision it working out in the future. Chainlink would obviously see a lot more use, being an oracle, crucial for, making sure prices are correct. And besides those projects, there's a lot of other projects that would potentially benefit as well. One that I've talked about quite a bit before is Polymath. Polymath has already been working towards tokenizing real world assets for a long time. They actually already allow you to do it. It's just kind of a weird process. It's not very crypto friendly, or it's not very like DeFi native. So currently today, it's still somewhat of a closed system. In fact, I've never ever interacted with it or traded anything on it because it is such a closed system. But that's not really Polymath's fault. That has more to do with regulation. And again, once that gets fixed, once that's all clarified, that would allow them to open that up and allow it to integrate with the wider DeFi space. T0 is another one that's kind of been around for a long time, and it's really similar to Polymath. It's kind of like a closed system that allows people to integrate into, the traditional securities world and trade assets sort of on chain, sort of not. There's Securitize, which recently partnered with the private equity firm Hamilton Lane to tokenize a portion of its $2.1 billion fund. There's projects like Goldfinch, which I've talked about a little bit before, and projects like Maple, which both of those lend capital to real world businesses and more without the need to over collateralize the loan. So traditional crypto loans in DeFi always require over collateralization. Well, these types of loans actually don't require over collateralization. They're under collateralized loans, more similar to a traditional loan structure. And these types of projects will almost certainly benefit from more assets coming on chain. Another great one is Centrifuge, which allows for the tokenization of real estate loans and cargo invoices. Global real estate is valued at $327 trillion. So obviously, even a small percentage of the global real estate market coming on chain would absolutely like be massive for the crypto space. And besides just those projects, like the old saying goes, a rising tide lifts all ships. I'd imagine crypto as a whole would benefit from tokenized assets coming on chain. This is certainly an area to keep an eye on going into the next bull run. We definitely need more regulatory clarity, and we definitely need more regulatory framework to really allow this area to fully shine and reach its potential. But hey, it doesn't have to be just here in the US. We could see that regulatory clarity happen in the UK, or happen in Japan, or happen, wherever, India, wherever. And that would allow those startups to come on chain, those securities, those hedge funds, etc., which would open the door for those things to be in the crypto space. So maybe we're not investing into US startups, we're investing into startups in Dubai, or startups in some other portion of the world. Regardless, it would still be hugely beneficial for the crypto space. If you have any projects that I didn't talk about that you think will benefit from this coming trend, let me know in the comments below. And as always, none of this was investment advice. None of this was me telling you to go buy these projects or that this will happen. Obviously, I'm not able to predict the future. I don't have the sight to be able to see, what's coming in the future. I'm just a guy on YouTube sharing my journey, sharing my ideas, sharing the things I'm learning. If this video is helpful, make sure to hit that like button. If you want to see more videos like this, make sure to hit the subscribe button. And you got to hit the little bell next to it to be notified each time I release new videos. Thanks for watching, and I'll see you next week.